So we had our first good CPI reading. Yeah, it came in 3% inflation, which is great. I mean, it's a decrease from 3.3% last month, and we saw some good improvements in some areas, a bit of a growth or a bit of an ascension in inflation in other areas, but I think there are seasonal adjustments that need to be taken into consideration. So all in all, from the CPI that I've seen, I think we get good news. We get some ticks off of Jerome Powell's list, off of the Fed's list, so they can finally start cutting rates. First, probably 25 basis points, but maybe at a certain point, 50 basis points. So let's go a bit on the inflation readings on the consumer price index report. So 3% as mentioned, the gasoline index fell 3.8%, which offset the shelter index, which shelter is a very important part of the inflation given its percentage in the CPI reading. It's like over 30%, whatever. I don't know I don't remember exactly how, 33 or 44, something like that. So it's a good offset. We also had some increases in the food index, but I think that's seasonal, and I explain it in a little bit. And also core CPI came in at 0.1%, which is good, mostly from vehicle insurance, household furnishing, which I mean kind of makes sense given it's summer and it's hot outside and people maybe want to refurnish their houses. Medical care and personal care, this is a big problem, or a potential big problem in my opinion, but we had decreases in airline fares, used cars, trucks, communication, and also I saw some decreases in lodging away from home, so hotels, Airbnb, stuff like that, which is odd, I would say, given that, well, it's summer and people go on vacation and so on, but well, that's what we got. So who am I to judge, right? Also, we have a 0.1% decrease on a monthly basis for the CPI, which is like the first decrease in this period of 1 year that we have here. It's the first deflation in a month, which is nice because this is the deflation that we see from a seasonally adjusted perspective. Why is that important? Because, yeah, we have a decrease on CPI and core CPI because food away from home. My thought is that during the summer, during the period where you go on vacation, you go out more, well, it's normal for restaurants to raise prices. So that's why we have a bigger inflation in terms of food away from home. It has persisted. Yeah, I wrote down here this January from at the beginning of the year where we had like 0.5% increase. But I think that kind of like translated and went hand in hand with other topics as well, other items. One was the transportation services, which was booming back then, because how I see transportation services kind of reflects in all other indexes. It's kind of same as energy because, well, we have energy if you want to cook food, if you want to go somewhere and stuff like that. So I think this is the explanation for the January one, but now I think it's something seasonal at the end. So it's okay. I'm not, let's say, I'm not panicking in any way for the increase on food of 0.2% and 0.4% on food away from home. In terms of energy, all went really well. Just utility and piped gas went up a bit, but all in all, I don't see this as a problem given the volatility that we usually have in energy. I think it's normal at a certain point. If it spikes really bad, then you can start kind of panicking a bit. But for now, it's not the case. Going further, okay, new vehicles, used cars, it's fine. I mean, we have a decrease, we have a deflation, we have deflation there. The apparel, a small increase, which is normal. I think 0.8% inflation for the past 12 months, it's perfectly normal. On medical care commodities here, it's a bit high, and that's why I mentioned that here it may become problematic. It's not right now because we also have services which also increased and it's like 3.3%. It may become problematic. It's not right now, but we'll see. We'll have to keep an eye on that. The good news comes from shelter transportation services, 0.2% increase on shelter. So the increase is smaller than usual and way smaller than what we had in the past. If this continues, that's good news. If it goes to like 0.1% or neutral, so no increase month over month, that's a very big thumbs up. So I hope we get there. I saw some videos that people are thinking that we'll have like a real estate crash in 2026, maybe 2025. I started understanding that trying to predict a real estate crash is, well, hard and close to impossible, and planning 2 years in advance, not gonna happen. You will be way off. It's just like a flip of a coin, so I'm not gonna bother with that. Also, what's good, transportation services, all in all, the 12 months inflation for transportation services is a bit high, still 9.4%. But I hope it will get lower and lower. Not necessarily, I don't think we'll get a huge deflation month by month in the summer period. Probably, I hope, in autumn. We'll see. But all in all, I think this inflation report is really good. I mean, I'm happy with it. I hope the Fed is also happy with it. And it's enough. And also looking at the labor force market and the unemployment rate, I hope, plus with inflation, it's enough for them to cut in September. July, I think it's off the table, because Jerome will probably be like, oh yeah, but we need a bit more time to see a bit more data. This data is not sufficient, blah, 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 blah. So probably not July, but I hope September. And maybe we see September, October, and December as rate cuts. And if we see that, and maybe one or maybe two of them are 50 basis points, we can get closer to 4% rate, which that would mean a lot, especially for certain companies which are very sensitive to interest rates, and also to real estate. I would like to see real estate going back up. I mean, well, mostly real estate investment trust, honestly. And also I would like to see a bit more of a rotation partially out of tech, because it's going bananas there and I don't like what I'm seeing there. So that's my view on the inflation report. It's a good one. It looks good for a rate cut in September. It looks good maybe for a higher rate cut going forward this year. So maybe we don't stop at this. Maybe they also change their summary of economic projections. That would be great if that happens. But we'll see. I don't want to jinx it or anything. So that's kind of all. If you like the video, like, share, subscribe. It's a new channel again. It helps me tremendously. And yeah, it's free for you to do that. So hit that like button, hit the share button, and definitely hit that subscribe button. Then don't forget to activate also the bell. And see you next time. Bye bye.